Hello friends, in this video we are going to see how you can go and create your own option trade, that too very easily using the relative performance graph as a tool, right? So this is a very quick video. If you want to learn more in detail about relative performance graph, you can watch the detailed video. But for now we will keep it very quick of generating a signal and taking an option trade using the relative performance graph tool. So what we'll do is we are at the home page of Quantsapp. We will go inside trading and you can see that there are quant models, and the first one is relative performance graph, right? So we'll click on that. So the moment you click, you can see that there is a sample basket by default which opens, right? So I'll explain you what this is. These are some of the stocks that have been plotted. I'll explain you what the plotting is. But if you want to add something of your choice, let's say if I want to add some favorite stock of mine which are there in FNO to the list, or remove something, right? I can just go in setting and I can edit this list of the basket that I have created right now, right? So I'll keep everything as default right now, and let's see how we can understand this concept of relative performance graph. So if you can see, there are 4 quadrants. One is red, the other one is blue, then we have green, and then we have yellow. So the entire idea is to keep it absolutely simple. Whenever a stock enters from red to blue is when the stock was falling and now it has started reversing the momentum, and that is when you should be basically going and buying a stock, right? So whenever something enters from the red quadrant to the blue quadrant is when we will buy that stock, and if something enters from the green quadrant to the yellow quadrant, then we will square off our bull trade or the bullish trade that we have taken, and we can also initiate a bearish trade, right, or a short trade. So that's the very simple concept. So what we will do is, these are the stocks, and we will just go and simulate some past data, and we'll see maybe one of the signal as an example of how you can go and use this for your own trading, right? So I'll go and select 1st December, which right now is the backtesting that I can do. So what I can see is that Maruti and Reliance are the 2 stocks that were in the red quadrant, and we had TCS and Infosys as well, right? But nothing has entered from the red quadrant to the blue quadrant right now. So we'll go one day ahead. So again we can see that these are the stocks in the red quadrant, but nothing has crossed to the blue quadrant. Then we can see on 5th December is when Maruti and Reliance had a signal according to this tool that okay, this is the time when you can go and participate, right? So we can take a trade in either of it, but Reliance is one of the favorite for everybody, so we'll take that as an example. So notice it entered from the red quadrant to the blue quadrant is when we have to go and buy that stock. Now the concept is, because this is on the daily time frame, right? So when you open this, of course you'll see the latest data point in real time, but because this is more of a positional system which we are looking at right now, if you have to do this intraday, I'll tell you towards the end, by just changing one setting, we can deploy the same system intraday as well. But for now, because it is a positional system, so the trade that, there could be many possible trades, but the trade that is my favorite will be a bull call spread. To keep it absolutely simple, we'll buy one leg of call option and we'll sell one leg of call option. By doing this, generally in a positional trading system, it generally helps you with a better reward to risk. So what we'll do on 5th December, so if we go and look at the chart of Reliance, on 5th December, this is the candle of 5th December, where Reliance was. So if you see, hardly there was a very marginal breakout on the chart. Ultimately, the stock went up, but this is the point when the engine showed us that, okay, this is a trade that you can enter in Reliance, right? So what we'll do is we'll go to a tool called as Trade Recap, where I can go and backtest my trade. Actually, what would have happened if I would have taken that trade, right? So I'll go and scan, and you can see there's an option called as Trade Recap. So I'll click on that and I'll create a new strategy. Because we are looking at Reliance, so I'll enter the stock name as Reliance. Okay. So let's enter Reliance. And the date of trade was 5th December. So I'll select 5th December. And because it's a daily system, so approximately I'll be taking a trade around the closing time, right? So that's why I'm selecting 15:30, which is the closing time, right? So what I'm saying is that on 5th December, there was a trade on Reliance. I want to go and backtest it. So as I said, that will take a bull call spread. So let's say 2460. So what was the price of Reliance on that day? 2445 was the price. This is the option chain on that day at that point. So what we'll do, we'll buy a 2460 call option, one lot, okay? And we will sell a 2560 call option, one lot, right? So that's how you go and create a bull call spread. If you do not know a bull call spread, maybe you can, we'll create another video on that as well to understand what a bull call spread is, but it's a very, very simple strategy. So all we have done is bought one leg of call option, 2460, which is around the ATM, and sell one leg of OTM call option. That's a bull call spread. Now let's go back to the RPG tool and let's see when was the signal, till when approximately was the signal valid on Reliance, right? So the idea is that everything moves clockwise. So Reliance, the moment it is in the blue zone, we are expecting it to move up. That's why we have taken a trade. And when it enters the green zone and starts coming down, maybe that could be a point where I can do partial profit booking or profit booking, because ultimately I'm taking a trade in options and there is expiry. So maybe I can square off that trade and take another trade in the next expiry whenever the signal comes again, right? So if you see what happened to Reliance after this, it is moving, right? So if I just keep scrolling it, you can see it's moving up. So you can scroll this day by day and you can see how it is performing. So you can see on 18 December, suddenly there is a spike in Reliance. Okay, and that's what we were expecting it to happen. That's why we took a buy trade. And then on 19 December, you can see that there was another big spike on Reliance, right? And on 20th December, we can see that it's entering kind of a pullback zone, right? Where it was going up continuously. Now it's slightly coming down, right? So maybe that could be a point, even though I can still hold it because it is still in green. But just to give you an example of how you'll run a real-time system. So maybe around that time is when I can think of booking my profit temporarily. And then I can maybe enter another stock which is now entering this zone, right? So what we'll do is, let me go back to the system, the trade that we took. And let me square off this trade on 19 December, end of day, right? So I'll select the date time as 19 December, around the closing time. If I set it, let's see what was the PNL. So you can see that this trade would have yielded me 11,762 rupees of profit. And generally when you do a bull call spread on any stock, the margin requirement will be less than 50,000 rupees approximately. So on a 50,000 margin per lot, 11,700 on this signal is what you could have made using such a simple tool, right? So the idea is, let me summarize this. So the idea is, whenever something enters from the red zone to the blue zone, you buy it. Whenever something enters from the green to the yellow zone, you square off and you short it, right? That's the signal. And how do we do it? On a daily time scale, we'll use a bull call spread and a bear put spread. If we should be aware of the risk management as well. If something enters in the blue zone and goes back to the red zone, that's a stop loss. You'll have to exit that trade. And you can see that there is a square in between, or a rectangle actually in between. That's a neutral zone. So if anything enters in the neutral zone, you will square off the trade, but you will not take the next trade, right? So the idea is that if something enters the neutral zone, if I was already long, I'll just square off my trade, but I'll not build a short trade, right? If it is in the neutral zone. So that's a positional trading system. If I have to do the same thing on intraday, all I have to do is just change one setting. I can go in setting, and instead of daily, which is default selected, I can select intraday, okay? And then whatever time frame you want to trade in. So let's say 5 minutes is default, but if I want to make this 15 minute, 30 minute, 1 hour, whatever is the time frame that you want to trade in, you can just change that. And if you just set it, what will happen is it will start showing you the same concept signals on an intraday basis. But the only difference is that earlier when we took a positional trade, then we took a bull call spread or a bear put spread. But when you do an intraday trade, you will keep it very, very simple. You'll do a long call or a long put, because on a very short time frame, generally a single option will perform even better, right? So when you're doing an intraday trading system, anything goes from red to blue, long call, green to yellow, you'll square off that call and a long put. If anything goes to the neutral zone, square off. If something reverses back, stop loss. That's the simplest trade that you can take. So I hope that using the relative performance graph, you'll be able to build your system very, very easily and on your own, right? And it's very, very simple to go and execute on your own. Thank you very much for watching this video.